G'day everyone and welcome back to Pete's Investing. Today's May 21, 2023. This is the Aussie New Zealand currency update. We've got the weekly trend here. It's showing bearish signals on the daily, likewise bearish, and I've got a trading idea on the hourly here for you. So going through each of these, for those new to the channel, we've got a triple moving average of the price chart, moving average 3, 5 and 60. That aligns with the it's married up with the CCI 150 moving average 5 and 50, and that gives us this little bearish indicator. Where the bearish indicator is long, obviously both indicators are aligned long. Where it's flat, it means one of the indicators is not lining up with the other, so it shows a neutral position. And down here I've included a awesome oscillator as well, just give you a indication to support the above indicators. So basically, without getting too complex, the more indicators that align, the better in terms of seeing a trend or potential movement to the long or bullish or even a bearish signal. That's the weekly trend lookout. So on the daily, got the same indicators there. Again, you're seeing it's primarily a bearish, but I've also got the support here at 104.71 and a resistance here at 11081. Now, I've also drawn a Fibonacci retracement between those highs and low in that support resistance range. You can see there it's punched through the 61%, which is always a key area to look out for. It bounced up from there as well. In fact, the first retrace came as far as the 78%, but the 61% is the key area to look out for, and that's a weakening sign if it's going bullish. In this case, it's actually retraced to the upside, but then it's bounced back down again to that 78%. So we're currently sitting at this 78%. And it may well continue to the downside. So just be mindful of that. Now on the hourly, if I zoom in on that one as well, again using that same strategy, we look at the fractal breakout, so taking short positions only, and this would have shown you a potential area to go short had you gone using the fractal breakout strategy if the weekly and a daily are aligned. So again, we're not in any shorting positions yet. Probably wait for it to break below that fractal to take further short positions. But you'll notice the CCI and our awesome is still in a bearish momentum. So again, to trade that more confidently on the hourly, making sure the weekly and the daily signals are both aligned. Now what I've got up here is a back test, and if I zoom out, you can see there during that early period when the price, when the price was moving in a bullish momentum, that was giving it, this is a profitability chart up here. That profitability was doing quite nicely until we hit this peak, and then it fell off and hit our drawdown effect on our profitability. If I zoom, if I just expand that positions, you'll see there it averaged down to an extra one contract entered into that drawdown. Now to avoid that, as I said, you must wait and make sure the weekly and the daily are aligned. So during this period, you would have gone long, and that was during that period there on the weekly, showing long positions on our indicators, and during that period there on the daily, long positions. Now, just be mindful the awesome oscillator was below the zero line, but it was showing a bullish momentum in line with our indicators up here with the CCI. So again, to avoid this area of the drawdown, you notice that period there was no bullish signal on our indicators, combining the moving averages with the CCI on both the weekly and the daily, with the exception of that little period there. But notice there was no bullish signal on the weekly, so you would have avoided taking those if you wanted to be really conservative. So to understand how to trade this and other trading strategies, reference the links in the description below, and subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.